Good morning, everyone. Jesse Webb, Traders Pro. Let's look at current market conditions. We had a decent little rally on a couple of days ago, and then Friday things turned and sold off pretty aggressively. We'll take a look at that here. Long-term trends, we're still sitting in this bear market, still now towards the lower end of this bear market, at least in this current trend, which oftentimes can create an opportunity for a bounce back rally or a bear market rally or just simply an oversold rally. That's where we're at currently on all of our indicators. We're just extreme for the most part across the board. The momentum indicator has started to turn back up this direction. It's moving this direction. It is part of that is because of this volatility now. It's not aggressively lower. It's just starting to stabilize here a little bit. And with that real strong rally that we had the other day, that definitely could be a shorter term bottom that we're starting to put in here. Breadth indicator still deeply oversold. Sentiment indicator is the one that we've just been waiting on. It is oversold, but not relative to where it has been at historically, and that oftentimes doesn't create a good solid bounce. Just not enough fear in the market. There is fear, but there's not enough currently, at least based on this indicator. We can certainly get a rally from these levels. And the other indicator that we've talked about here is our buy-sell ratio, which is now starting to create a little bit of a divergence on that retracement currently, and that often can provide an area for, again, some support. The sellers may be done, and buyers starting to step in here at these levels. We'll see how that pans out today and this week. Sentiment indicator also, we looked at this. We hadn't gotten to these deeper oversold levels quite yet. We still may, but we also this is down into the 17 level. These get down all the way to that 9, 10. The one that we had clear back here dropped it all the way to the bottom. Had a decent rally from those locations. Current sectors are still that we're looking at, still leading oil and energy. Oil and energy. If we take a look at some of the sector ETFs we've had. Or even the commodity ETFs, we've got USO. You can see the year-to-date returns on some of these commodities. UNG, natural gas, up 79. USO, which is oil, up 30. And stabilizing a little bit here. It's had a couple of little false starts on some of these recent trends that we've had, but it is still had a nice uptrend, and then this counter trend retracement, a little whipsaw action right here. But this larger oil move, again, this is not the actual price of crude, but it is up in the $80-90 range, and that's extremely profitable still for a lot of these energy companies. So it's not surprising that we're going to see some of these stocks in this sector, some of these energy and oil sector stocks leading currently. So that's the place to be looking as far as stocks that are currently working and currently in the trending mode. The market as a whole, if we take a look at the Dow, this is an interesting chart here because you can see just how bad some of these stocks have been beaten up this year. Intel, Nike, Disney, these are down 50% year to date, deeply oversold. And again, as a contrarian investor, if that's something you're looking for, then those may be opportunities for a bounce. We as trend followers would prefer obviously the stuff that is working, like Chevron, Merck, these stocks that are currently trending higher. There are some stocks that are trending higher. That's one place to be able to look, is to see which ones are in this upper range, just simply by clicking on this button here under Index and Dow, and that'll give you some of these leading stocks within those different indices as well, S&P, and the NASDAQ as well. If you're not a premium member, I've got an offer for you on the link below. Go ahead and sign up, and we look forward to having you. Thank you, and have a great trading day.